Hi everyone, I'm Aura Ogorian with ACap Advisors and Accountants, and welcome to another edition of the ACap Recap, where we go behind the blog and give you quick financial and tax tips. These are based on actual questions we get from clients or based on current hot topic. And today we're going to talk about homeowners insurance. We're going to discuss the basics of homeowners insurance, how to review your policy, and how much coverage you need. So stay tuned and we'll dive right into it. But before we begin, remember to subscribe, like, and share our channel. And if there's a topic that you want us to cover, be sure to include it in the comments section below or send us a message and we will make sure to cover it in a future episode. If you own a home, chances are you have homeowners insurance. And if you have a mortgage on your home, you definitely have homeowners insurance because lenders most likely will not lend to you unless you have homeowner insurance coverage on there. And I say most likely because I don't know of any lender that will lend you money on your home without protecting their assets. Now, not only do lenders require you to have homeowners insurance, they also want you to have a minimum amount of homeowners insurance coverage. And today we're going to dig deeper into what are some of the coverages that are included in homeowners policies and how to make sure that you're adequately covered. The standard homeowners policy really covers four main areas. And I say the standard because homeowners policies, like any insurance policy, can be super customized to your interests. But the four primary areas that homeowners insurance covers are property damage, personal property, liability coverage, and medical coverage. On the property damage, it would be things like wind, fire, hail. It does not include earthquake or flood. Those policies or coverages are separate. You have to buy them separately. Personal property would be anything like your clothing, jewelry, furniture, that type of stuff that's damaged that would be covered under the personal property part of the homeowner's insurance. The other part of homeowner's insurance is a liability coverage. And that's when someone, for example, let's say slips and falls in your home and they get hurt and they sue you. That's where the liability coverage part will come in. And then the last part is the medical coverage. That's also when, let's say someone falls and then they get hurt and they have medical bills, or let's say you have a gardener or someone that's working in your home and they suffer injuries. It would cover workers' comp and medical insurance for them as well. Let's start off with probably the biggest part of your insurance policy, which is the property damage component of it. The property damage component is, as I said earlier, covers losses because of fire, wind, water damage. And as I said earlier, it does not cover earthquake or flood. What you want to do with the property damage, you want to make sure that the amount that's shown on your policy, how much is covered, is going to be enough to replace whatever is that happened with the damage. So for example, if the event you have a fire and you have to rebuild your home and it's going to cost you $1 million to rebuild your home, you want to make sure that the policy coverage, your insurance policy, is enough to be able to rebuild at $1 million. Now, there are two types of coverages that are part of the property damage. There's either actual cost or there's replacement cost. Actual cost is not as favorable because it includes the cost of your home less depreciation, so you're not going to get as much money back to be able to rebuild. Whereas replacement cost is what it would cost to completely rebuild your home based on today's prices. So when you're looking at your coverages, try to get replacement costs for your property damage because that's going to ensure that if you have property damage, you'll have the full replacement cost, rebuild, and it'll be less headache for you. Now let's go over the next part of your insurance policy, your homeowner's insurance policy, which would be the personal property part. Now the same principle applies, as I mentioned earlier, about the property damage, replacement cost versus actual cost. But the personal property, let's first define what it is and then why you need the replacement cost. So personal property would be the loss of clothing, jewelry, TVs, VCRs, I mean not VCRs, but DVD players, anything that you have in your household that you have to replace. Now, if you have actual cost, that means that whatever the cost was that you paid to buy that big screen TV or the microwave or whatever it might have been, that's where they're going to pay you less depreciated value, which means you're probably going to get pennies on the dollar. If you get replacement cost coverage on your personal property, that's going to ensure that when the time comes and you need to replace a new TV, you can go out there and buy a new TV at the current market value, or a new microwave or a new stove or whatever it might be, or new clothing, without having to worry about the depreciated value. What you also want to do to make sure that you got coverage for the personal property is take a very detailed inventory of what you have in your house. So that way, if you have a claim on your personal property or homeowners insurance, you can easily show the insurance company exactly what you had and what the price you paid for it. And if you have a replacement value, you can just go out there and replace it at the current market value. Another thing that people recommend is maybe doing a video of your home. So go room by room, take a video of things that you have. That's also another way of kind of taking inventory. And that way there's not going to be a dispute of saying, oh, you had 5 Rolex watches, or you had a few certain high-end paintings that you may wanted insured. Now that brings up a really good point. If you do have really high-end personal belongings, such as high-end art, or you have some collectibles, or anything that's really high dollar value, first off, you need to let your insurance broker know, or your insurance agent, to make sure that it's covered. If it's not, you want to get a separate insurance policy to specifically cover those items, especially if they're high dollar value items. Now, the next two components of a homeowner's insurance policy are liability coverage and medical coverage. And as I said earlier, this is for accidents that may happen on your property. And these types of coverages ensure that you have enough money in there for the insurance company to pay for medical bills for someone who might get hurt, pain and suffering if they missing work because they're not able to go to work, lost wages if they're unable to go to work, any type of death benefits, legal costs, really anything that would arise from the result of someone getting hurt on your property. Now, the amount of money that you should have, or the amount of coverage you should have for these liability protections, really depends on a number of different factors. And I can do an entire video just on liability coverages. But I would say in general, work with your agent to see what is an appropriate amount to have for your liability coverage. And then beyond that, what you want to do is you want to get some umbrella coverage, which I'll do a separate video on what is umbrella coverage. And that umbrella coverage will go beyond the liability coverage. So let's assume that you have $300,000 of liability coverage on your homeowners insurance. And then you also get a $1 million umbrella policy. Basically, that $300,000 now gets increased up to $1 million in the event something happens. The umbrella policy kicks in on anything over $300,000. The two key takeaways from this presentation should be: you want to work with a reputable insurance agent, a property casualty insurance agent for your homeowners, to make sure that they structure a policy that's going to meet your ultimate needs. And if you need a referral to an insurance agent, please let me know. Put a message in the comment section below, and I'll be sure to recommend you to someone who's in your area. Also, review your insurance policies on an annual basis, or whenever there's any significant changes to your circumstance. So for example, if you have a big home remodel, even if it's a small home remodel, or if you buy a lot of new furniture, or you have some collectibles in the house, you definitely want to make sure that you review your policy to make sure those things are covered. Thank you again for joining me for another edition of the ACap Recap. Please remember to subscribe, like, and share our channel. If there's a topic that you want us to cover, be sure to include it in the comment section below. And until next time, thank you.